Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 158 for May 4th, 2021. My name is David Kosmeter. I'm the creator of TimingResearch.com. And today we will be analyzing your trade ideas. So we are recording this at 4 p.m. Eastern Time. And today I've arranged for Michael Filighera to join us again. And you should be seeing his screen right now. And also the option professor is here to moderate. So I'm going to go ahead and turn it over to him.
Okay, sounds great, David, and great to be here. We got a lot to talk about. We had a big turnaround Tuesday if you were in the Dow, and we didn't get such a turnaround if you're in the NASDAQ. So there's a lot going on up here at the 4,200 level of the building, pretty high up in the building. We'll find out what Michael Filighera thinks of everything, and he'll have some Elliott wave stuff as well. So before we get started, Michael, a quick background and what's going on over at your firm.
Okay. Good afternoon, everybody. My name is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And I have been trading the markets for over 40 years. I started out as an options market maker here at the Pacific Exchange in San Francisco. I've traded here, I've traded in London, I've traded in Amsterdam, Germany, and came back to San Francisco. Left the floor in the early 2000s as the mass exodus was happening and everybody actually was going to electronic trading. And when I went to electronic trading, I didn't really like the how to try to play the volatility. And so I actually turned to becoming a day trader. And I switched from options to futures. And that's been the bane of my existence since. And it's a rocky road and it takes a while to kind of pick up all the nuances, but once you get it and you can plot your course, it's an extremely profitable way to trade. And that's what I'm still doing. And also writing and presenting a blog post each day on my analysis for the S&P and for the NASDAQ.
Perfect. All right. Well, we got a lot of stocks on the list here. The first one is Apple. It obviously went up and knocked on the door of 140 and was turned away. And some companies like Goldman Sachs, they've thrown a number like $85 a share on this stock, which I think would shock a lot of people. But what do you think of Apple? Great earnings, bad price.
I actually do. And in fact, when they presented their earnings, I spoke about it in my video post. And Apple is an extremely well-run company. It's extremely profitable, but it's going to get caught up in the overall market moves, and it's going to get hit harder because it's such a widely held stock. And I had felt that for quite some time that Apple needed to pull back. Doesn't mean it's not a good company. Doesn't mean it still has, further to go on the upside. But you can kind of see that when we got in January, we got up to 145. The market pulled off in what is, I would consider, an Elliott 5-wave decline. That suggests that the next rally is only going to be a 3-wave, and that's exactly what we got. So it's doing nothing more than just fulfilling its destiny via what the charts are telling us. The charts are telling us that we should have another leg down, and I'm going to draw a very quick Fibonacci on here. Come on. And
is that like a 1-year chart we're looking at, or?
I'm looking at the daily, which goes back, about a year.
Yeah.
So, and come on.
It looks like if it takes out that 118, it's a sayonara.
It is, and now my computer it gives me these little hassles, and it won't. Well, I wanted to go do this, and now it's going to do it, because what I wanted to do is that under Elliott, if I'm going to consider this a C wave, this indeed, the relationship is the C is related to the A. And the first relationship is that C equals A. So we have 145 there, and we've got 116. So you've got about 29 points there. And if we take 29 off of 137, you're just really just above, you're down to 106. So that is a very realistic picture for Apple. Now, here's the gig. It really doesn't foretell anything negative about Apple. It's
Right.
the market, and the market is going to ebb and flow, and everybody gets caught into it. But what I can say is, Apple didn't necessarily blow the doors off of their earnings in this past quarter. And you can see they weren't bad, $1.40 a share. They got, great prospects. They've got new product, et cetera, et cetera. So, things still look good, but it got too frothy. And so there's a couple of things that go with it for me on this. We still have got investors and large investors and banks and everybody else having to deal with, if this infrastructure bill currently in the Senate and the House passes, the only way it's going to get paid for is they're going to raise the corporate tax, and then also raise the tax on people that make more than $400,000 a year. That's going to shake the boat a little bit. And that's what I think is happening. And, that they're going to say, oh, I'm going to get out, do what I need to do with my taxes, rearrange things, whatever they need to do. And that's what I think is going to help bring it down. Plus, just a downturn in the market's going to bring it down. So I want to say it doesn't really have a lot to do with Apple. But what it does have a lot to do with is if you have a position here in Apple.
Right.
And then I would say that, you really got to plan for that move down maybe to 107, 106 area, which from here is $20. How do you want to trade it? Well, if you don't necessarily want to sell your stock and then rebuy your stock, you can sell calls. You can buy puts. There are several things you can do. If you're long the stock, I would suggest buying puts because then you're properly hedged. You are if you sell calls as well, but whichever's going to give the larger premium would be the one that you want to sell. And right now, I would imagine that the calls are still kind of frothy. But in any case, I think you protect yourself going down, because I don't particularly see the markets doing this falling off the cliff act. And they felt that way today, but this was all really, when I read my charts, that's what it was telling me was going to happen. And again, the underlying thing for me as a technical analyst is I can't give you specifics. It's going to go because of this, and this. It just tells me that this correction is going to continue. And those are the points where we should be looking for it to find support and complete. Now, bear in mind, when the correction is complete, it's going to zip, it's going to roar, because it's 3 down and it's going to do another 5 waves up. And I would then expect Apple, again, this is a year chart, over the following year, to probably go to new highs again. And I'll tell you that I really do believe that, because I think that the S&P and the NASDAQ and the Dow, that's exactly what they're going to do. So
yeah, I was looking at the price earnings ratio. It went a year ago at 20-1 and it went up to 30-1. That's a 50% jump, and their price to book went from 12.28 to 31.97. So I think there's a valuation aspect here.
yeah.
That would make the most sense, that a company that announced that type of earnings would
Right.
have a decline. It has to be because the valuation of the company is deemed too frothy.
Too frothy, right?
Yeah.
And so what I like is that you, using fundamental information, came to the same conclusion.
Yeah.
And so that's what I like, how technical analysis and fundamental analysis can meld and show you the path.
And there's always a reason behind the technicals, but the technicals tend to lead because, the money will get out of the burning building before the news hits at 5 o'clock. Yeah.
Good point. Good point. That's true.
All right. The next guy up here is a therapeutic that has been very, very active. Another one that probably is very highly valued, and it CRSP, CRISPR Therapeutics, and a big story there over the last year or two with these guys. But today they got it on the chin, down almost 6%, and
Yeah.
probably another casualty of the valuation tightening up.
But I got to tell you, it's the same chart pattern, pretty much. You can see that this is the A wave down, this was the B wave up, and it really just was flat. It didn't really even take out that high, barely if it did. And now it's fulfilling its destiny, which is this likely is going to come down a lot further.
It's a company I don't think that's making any money yet.
Is this a German company?
I'm not 100%. I know it is a therapeutic.
You know, the AG kind of tells me that it's German.
Yeah, that would be an indicator.
Why my computer is futzing with me and won't let me draw these. But it does that every once in a while. There you go. Let's put it up there. Now, okay, so just to give you an indication that this thing really could slide. And there's two things that the C wave, if indeed this is the C wave, is going to be equal to that A wave. And I got to pull this thing open even more. Look where that shows. I do not think this thing goes to 17, but that's what it would be equal. And that's a little bit too far. So then the next one is that it'll be 62%. So the C wave will be 62% of the A wave. And that's more realistic to me at 63, 62. So if I don't like the 100% where that it equals, because that I just, unless truly this company doesn't make money and everybody finds out that it doesn't make money, then yes, 17 is going to be a possibility. But obviously they're doing something right. Or was it just all speculation running it up like that?
Yeah, I'm looking at the moving averages and just using a simple 10-day on a 6-month graph. Once it broke under 128 and change, it was pretty much on the defensive. And then the RSI is under 50. So it's got a couple of, shall we say, negative things going on right now. So if you're a momentum player and you're looking for the upside, you're on the wrong side of momentum, right?
Yeah, and really why I think one of the reasons it accelerated today is it broke, this is the 200-day, this
okay,
purpley one. It's 200-day and it broke below it. Straight off the bat this morning, it broke below it. And that accelerates things. That's like, okay, that's the key one. Now, what it's got going in its favor is that the 50, the 20 are sort of angling down, but the 200 hasn't even started to angle down. So that tells you it should remain flat.
On my 5-year graph, I'm looking at an RSI that's come down. I'm using a 28-day, and it's come down to 50. So this is crunch time. In other words, if it can hold here, and it can start turning up,
right,
you might be looking at a very good buy down here. So it's a crunch time for this thing. You start breaking underneath the lows, and this RSI gets way under 50. That's going to be no good. But
no,
if it could hold here and then give you a higher price next week or something, it might, you could use this week's lows as a line in the sand if it holds.
Right? I agree. And I think that's a very smart strategy if this is a stock you play. Yeah.
Yeah. Because like I say, the RSI has come down from almost 80 down to 50. So this is obviously a correction. But when it gets around the 50 number on RSI, sometimes this is the area where it makes a decision whether are we having a correction or is it game, set, match.
Right.
And I think if we start breaking underneath, what is it, 110 or something like that, or
right,
108, whatever, that could be leaning more towards game, set, match for a while.
Yeah. Well, we've got some Fibonacci. Excuse me. We've got Fibonacci support at 109.50.
There you go. There you go.
But I agree with what you just said. If it breaks below that,
that's not good.
Your next level is 91, 92.
All right. The next guy on the line is CCS, a company I'm not familiar with. Century Communities. Sounds real estatey to me.
And they're loving it. It actually was up 4% today.
Which would make it more likely to be in real estate or something, right?
Yeah. I would agree. And so that bucked today's trend. But man, I'm looking at a weekly chart. This thing is frothy up here. So although we had good earnings, and that's what's propelled it even higher.
Yeah, new construction homes. So, that's the game in town that's making all the money.
It is.
Lennar and these kind of people.
It
They're
is.
in
Let me go up
Colorado.
one more and look at the monthly on this. And let's just see. They're all getting a little frothy.
Mhm.
So it may pull back. And any pullback from these levels, I would think you've got to leave open the possibility that it can pull back all the way to the on a monthly chart, the 20-day moving average. But if I bring this back down, I think you could get down to, yeah, this would be the fourth, get down to like 63, which is not all that bad considering how quickly it moved up. I mean, it gapped, so it's got maybe, just coming down and filling the gap, which again brings you back towards 68, as that gap started at 67.5 the day of earnings, and it gapped up. So, but you're right. Bear in mind that if indeed we continue to open up and we continue to have an economy that's going to revive, and the infrastructure plan does, or the infrastructure bill does pass and gets enacted, there are a lot of building and materials and things of that nature that should provide substantial gains over many years. So you always need to add that in. So with having said that, I don't know if I'd want to jump in here, what looks like all-time highs, but I definitely would look to be a buyer on pullbacks if this is a stock that you want to put into your portfolio.
That 76 number should have a lot of support, huh? Because that was like a breakout point. That was a breakout point.
Actually, the breakup point was 70. Yeah. 69.98 to 70.
But if you were long it and you were concerned about it pulling back at some point, this is the neighborhood where the covered calls and taking some off the table, or taking some off the table and putting in calls or call spreads would be the next logical thing to do. But
absolutely,
you've got millennials coming looking for homes. These guys make new homes. They are, there's no homes for sale. So, they're in an industry where Lord only knows how far it's going to go. But,
right.
If you're dealing with real money and you'd like to take something off the table or hedge it here or do something, I don't think anyone would blame you.
No, I
not on something that something that's gone from April at 60 up to 80. That's a pretty hyperbolic. Parabolic.
Yeah, in a month, yes.
Mm-hmm.
But I think
good thing to own, but a very tough thing to say. Start a new position up here.
Yes, and I think that a lot of it just gets pumped up because the market begins to try to factor in that infrastructure bill is going to get passed.
Yeah. Sometimes though, when you're trading something, if you want to get into something like this, and you want to keep it on a leash, sometimes using a 5-day or a 1 month, and then using the moving average, say a 10-day or something like that.
Yes.
If you did a 5-day, the moving average comes in at around $78. That's not too far
and I'm
away
using a 4, and it's coming in on a daily chart. It comes in at 75.
Yeah.
My 8-day comes in at 72.
Yeah.
And then you got the 20.
If you do go into something like this, from a trading aspect, because it has tremendous momentum. You might want to use a short-term chart and a short-term moving average as a get out, just so you don't end up being involved in a correction if it were to happen, right?
Right. And the other thing is that this stock, I'm looking at the bid offer. I mean, it trades in a huge, you could drive a Mack truck through that bid offer. Yeah. So be careful.
Well, that's probably why it's getting such a good run here, because the order imbalance has nobody on the offer side.
There you go. Yeah.
Well, this next guy looks like it is a drunk driver, because it's all over the road. I think if you were a cop, you'd pull it over and say, what have you been drinking tonight? This is Tesla. One day it's at 900, the next day it's at 600, then it's at 750, and today it's at 673. Yeah. And I think this weekend we can look forward to Elon Musk being on Saturday Night Live, which might be more amusing than owning the stock. Huh?
It could be more amusing than owning the stock, because most of the cast doesn't want to do anything with him. Tesla is one of those frothy stocks. the company finally begins to earn some money. But I think what's starting to happen here is, again, if the infrastructure package gets passed, it's really going to give an additional boost to Ford, General Motors, all of the automakers, particularly the US automakers, who are shifting factories, production factories, to electric versus continuing to manufacture combustible engines. And I think as that takes hold and we see a shift that people are continuing to buy electric vehicles, but they're not going to be focused on Tesla, that this thing comes back down to earth. But right now it's pretty much the only game in town. And
what is your chart showing? I got a sell signal on it around the 725 area after this rally that it just had.
yes, because it broke. Let's see, when did it break?
Is that a pretty good number, 725? And right
yes,
now,
because it broke a level that, right there, yeah.
But I've got a support. I've got a support that has not been broken since this thing came out at 610. Does 610 look like a number that you could buy against?
No.
Okay.
No. Again,
there's a moving average I'm looking at that it got tested when it went down to 538, and then it ran all the way back almost 800. Now it's come back down to the lows of 660, and that average is now coming in at 610. And that average has not been violated since this thing went above $45 a share. It's on a 10-year graph.
Right.
Oh, it's an interesting sidebar.
Yes, it is. And if I look at my hourly chart, which is going to be more the one that people trade off of, it's come off. Yeah, that's 1, 2, 1, 2, 3, 4, 5. That's the third. This is a 4. I think it's got one more leg down. And that, I would imagine, is going to take it closer to, first of all, that 610 number that you said.
Yeah, because I got a high at 610 back in November of 2020. So right around November, so I'm looking with that corresponding to the moving average. It looks like that 610 neighborhood would be an interesting neighborhood to take a look at this thing, if it gets down there.
Yes, but more importantly, yes, and I think it will, actually. I do think it will. You've got this low right here at 591, so you got a zone. And in Tesla, dropping an additional $20.
There's nothing. No.
So, and then underneath all that, we've got the 200-day moving average.
Maybe it'll happen after the SNL skit that doesn't work or something like that.
It might. It just might. But again, not that Tesla follows the market, but when you've got the algorithms selling baskets of stock in these indexes, they're selling everything often. And so there's no escape. So, and I think, yeah, it's frothy. I think it needs to come back down and reprove itself, but we'll see. It's not a stock that I trade. I've never really traded it because it's just, if you like volatility, go for it. If you like volatility and options, you've got some great positions, but that volatility can turn around and bite you so hard that it knocks you out.
All right, let's turn to this one that's located in Vegas, and it was a 68-cent stock or something like that a year or so ago, and went up to 60, and now it's back in the 30s. It's RIOT and
RIOT Blockchain.
RIOT Blockchain, and maybe RIOT Blockchain's having trouble because people are figuring out Ethereum and their blockchain, and maybe I don't know.
Exactly, isn't it funny?
Mm-hmm.
When you don't have the corner anymore on the
exactly.
Yeah, you don't have the corner on the market anymore, but they're still not making money.
Would this thing be good bargain or more of a get in it if it broke above 45?
Yes, because then it's going to move back above the 50-day moving average. And this is on the daily chart.
Yeah.
It's moving up. And one thing that I've always used is when you're moving averages. So I would start with coming down and just really looking at my moving averages on my, like the hourly. Right now, you can see these things are all lined up for this thing to continue lower.
Yeah. Oh,
You've
yeah.
got the 50s below the 200, the 20s below the 50, and your really short-term ones are below the 20. Now,
Oh.
the very short-term ones have kind of flattened out, but that's just because of the way the stock closed. But the rest, if they don't start to turn and look like they're going to start going back up, this has nowhere to go but down. And if I looked at this, I would think it's going to drop down below that 35, maybe try to test this low from 2 weeks ago, or 2 weeks ago.
I'll give you a little number to look at. Tell me, what do you think it is? The high in January was about $30, and a 61.8% drop from 80 is about $30.
Wow.
So maybe
Okay.
$30 is the neighborhood where East meets West. What do you think?
You know, that makes a lot of sense. And again, I go back to the daily, you're saying 30, and there we have that 200-day moving average at 27.
There you go.
That's actually very good. Yeah, that's a good one. I would definitely include that. And that would make sense to where it could go.
And
For
by
sure.
then, people will be throwing in the towel, and when they throw in the towels, that's when you want to collect them, right?
You betcha. That's when you want to go and get in. Yeah.
Because
They can't stake it. They can't take it anymore. So,
well, let's hit this next one, Nvidia, because Nvidia, I listened to the CEO with what's his name, Kramer, one day, and it just seemed like he had it all going on all cylinders, and big data, and he's in all the gaming consoles, and he's in the smartphones. He's all over the place. I mean, it seemed like he had the world by the whats. And
yeah. And that forced the stock up to $650.
Yeah, and it went up to $650, and then of course it seems like it's settling back down again. Maybe another casualty on the valuation deal, right?
Well, I think it could continue to drop. They don't report until the end of May. And so I think you're going to get this volatility in both directions until that happens. If we go up tomorrow, and in other words, if the indexes go up tomorrow, they will pile back into this. It's just the nature of how this beast trades.
Yeah.
Because you can see that its low today was 560, but in that last hour, they returned as buyers, in the market, and boom, it jumped $14 in an hour.
Yeah. Of course, it was going into the abyss.
It kind of was, you're right.
Yeah.
But I would leave open the potential. I mean, right now it's just 3, but I don't think this is over.
It's a lousy looking chart, actually, isn't it?
Yeah, kind of. But
I
I'm
mean,
thinking
I got moving averages that look like fish hooks pointing to the downside around the 605 area.
Yeah, right here. Yeah, I see them.
And so, but I also, on a longer term graph, I've got support coming in at 558. So is that where it bounced from today, pretty much, right?
Yeah, 560.
Yeah.
So right there. Yeah, right above it.
So there was a reason for that from the standpoint of the moving average here on the longer term graph, and the RSI is still above 50 on it. So you're still in a bull market on it.
Yes, and that was going to be my point. So thank you for making sure to include that, because this stock can just as easily turn and go back above 650. It really can. And because it's a participant in the NASDAQ, and if the NASDAQ sells off heavily, Nvidia is going with it.
And the RSI on the 1 year just went down to 50. So again, this is the neighborhood where it's got crunch time, and it hit a nice long-term moving average, and the RSI is around 50. Yeah. So if we don't see it take out that 550 area, maybe it's a buy right here.
Yeah, and I mean, they do have some good things over their competitors, and so the CEO may have been like talking off the top of his head and really talking a cherry picture. But from what I have seen, it's true.
Mhm.
So until I'm proven otherwise,
It's obviously not for the faint of heart, huh?
definitely not. And
Yeah.
look, it's a very expensive stock. Anything over $500 is really expensive. So there's a couple of things, I think if it gets up high enough, then they're going to have to consider, and they may announce that at the end of the month. They're going to do a stock split. So yeah, who knows? A lot of things can happen, and I think you can protect. But I would first look for a break. If it's going to break, exactly that support level you spoke about, which is what,
5.5, yeah, 550, 560, right around there. Yeah.
Yeah, if it breaks below there, then then I would think that it's going to head down to the 200-day. But even here, this is a stochastic momentum. Yes, momentum sank because the stock got nailed today, but you can see it's kind of getting a little bit into the oversold levels. So
Yeah, can we throw up IWM? That's the Russell 2000, just as a sidebar here, because that Tom Lee guy from Fundstrat, he really was a believer that we're going up toward 4,400 by the end of May. And he thought that the IWM staying above 220 and 221 was very important. It ran up to 230. Now it came
it
all the way
did.
back down. Now, is it still above the 220 area? And
It
is there
certainly
some
is. In fact, guess what the low was today?
221?
221, basically 220.96.
So,
221.
if it breaks underneath that level, would you say, like if it broke under 220, 219, would it be folding its chair? And if it doesn't, is this the bargain of the month?
I think, well, on a technical basis, I think if it breaks, but this is the 50-day moving average, and that's what's sitting at 221.
Okay.
The 50-day moving average. So, and on a daily chart, that's an important one. Now, this is still not pointing in any direction but flat, which is why I think it recovered off of that. But I think if it breaks below that, then you're looking at 215 and likely down to 208. So that would suggest that the Russell itself is going to start dropping in a much larger correction. It's not a matter of if, it's a matter of when. Because it has high correlation to the NASDAQ and it has a high correlation to a lot of the stocks in the S&P, both of those markets, I think in my analysis, have reached a near-term bottom and can very likely start building on the advance again, with both the NASDAQ and the S&P going to new all-time highs before the start of that larger, deeper retracement.
And the RSI on the yearly and the 6 month is right around that 50 number. So again, another crunch time deal. Whereas if we break under 220 and 215, that could be ominous. And if we get back above what number would you use on this one to make it look like it may be back in the ball game? Above 226?
Yes, I was going to say 225, 226. Exactly right. Because you got the 20 at 20 days at 225.
Supposedly a lot of reopening stocks in this.
To prove itself. So in other words, it's like, I wouldn't jump up and down and start cheering for it if it just broke 225.
No, that's a sustain it.
Yes, exactly.
All right, let's turn to Pfizer because everybody's got a little of that going in their right arm, huh? And apparently it's a profitable thing to be shooting in your arm because there some kind of billions of dollars they announced that they're making on it. This thing gave you a buy signal on your chart. What about 35, 34, 36?
Yeah. Quite a while ago.
Yeah.
Way down here.
So
I mean, this was
pays
it
a
came
good
back
dividend.
up above that.
Yeah.
34.
This is the kind of stock that people like now because they want to get income because they get zero on treasury bills and they want to get something that the PE ratio is not a joke. And then they want to get something that is not frothy. And so this fits into the buy zone of a lot of people who are trying to get income and have their principal rise, as opposed to bonds where they get no income and their principal drops.
Well, the question I would ask, and again, I'm not looking inside this company. I have no idea what other particular drugs are in Pfizer's arsenal that are its mainstay.
Yeah.
So in other words, they sell enough of it to support itself. Because, of course, my hope and everybody else's hope is that COVID gets under control. We do reach some form of a state of herd immunity.
Right.
And we are reopening economies, and things are now beginning to look like we've got stuff under control. So that means how much COVID vaccine is then going to be needed moving forward. But the big question, of course, is going to be, will they then have to redesign or come up with a booster that will need to be getting once a year, twice a year, who knows?
Mhm.
So there's a couple of ifs out there to really, in my mind, to determine, does this thing return to $45? Or does it continue to rally? I mean, this has been a sweet, decent rally.
Particularly for this kind of a stock. Yeah.
Yeah. Yes, exactly. So I think I might play it via options versus coming and buying the stock. You know, if you
Yeah, I
still,
mean, it's really a dividend player. That's why people get these things.
oh, okay. Well, in that case, if you really are looking for a dividend,
Yeah.
um,
And it's in the healthcare sector where we got the aging population, blah, blah, blah.
true.
You know, so, I mean, hey, listen, it looks like it's going up, looks like it's fine. And basically, if you hold on to it and it pulls back a little bit, who cares if you're going to be
So right
holding it
now,
for the dividend, right?
What are they going to do for what's their dividend for this latest quarter?
I'm sure it's 3 or 4%. I mean, I think it's 3 or 4%. What is it? What does it show?
So it's about 30 cents, 30, 40 cents.
Mm-hmm.
Okay. So, and that's per share. If you got 1,000 shares, you're going to get what, $300?
Mm-hmm.
How much protection does that give you if the stock turns in?
But the people that buy this might be in the funds that have income funds, and ergo they might be buying 10,000 shares of it. You know what I mean?
Right. And so, yeah, it depends on how they purchase it and by what means. Yeah, you're right.
Yeah.
And that's more your end of the.
Yeah, it's almost 390. Hey, listen, it's almost 390 dividend yield according to my screen. I don't know if that's accurate or not, but it's probably somewhere in the ballpark. And when T-bills on a 4-week basis pay 0, this is the kind of thing that looks pretty good to people.
Okay.
And it's in an arena called healthcare, and everyone knows that they've got every time you turn on the TV, it's and Pfizer will have 40 billion doses ready by next week. You know what I mean? It sounds like a lot of doses, right?
Well, there's a lot of people in the world.
Exactly. And then they come back for the booster shot, so they get an upsell,
Yeah. Oh, yeah. Yeah, it's an automatic. You're right, because yes, and thank you for that, because I tend to get a little bit myopic and I'm thinking of the United States.
Oh yeah, no, we're looking to export this stuff all around. I mean, Europe got a lot way to go, and developing emerging markets. Oh, you kidding?
Oh my God, India's getting
just
annihilated.
India. Imagine 6 billion shots in the arm. It's got to be a buck or two to be made on that, right?
Yes, one would think.
All right. Well, the next one up is one that didn't get the very good rap out of Europe, but I think they're jumping back on their bicycle after the bad report.
Yes. I mean, we need to get people inoculated, and therefore, you're going to make this case about that you've got Pfizer and Moderna have the best efficacy rate, and then Johnson & Johnson below that, and then AstraZeneca below that.
Yeah.
So they're fourth,
Yeah.
the way I look at it. But it's the only one that's available in quite a few places. So,
and it's already in Europe, right?
Yeah.
Mm-hmm.
Yeah. But I have to tell you that it's got a lot of proving to do. If it can hold here and can turn, and then it's got to head back above 55 to show that it's got legs. And then in my calculation, these are chop market. Wow. Yeah. Choppy and thin, because it's an ADR.
Yeah.
Me personally, I'd stay away from it. But if you like it, yes, I will agree with you, Jim, that I think it needs to go back above 55. If it can't, then you don't want it.
Yeah. And if it got under 50, it might not be so good.
Get out of it.
Yeah. All right, Microsoft, everybody's favorite stock to love. Not a very good place for the ex-owner to be married, apparently, but
Well, the way I got to look at it is that people really, if someone asked me today, gee, is Microsoft going down because the Gates has announced they're divorcing? And I was like, I doubt it,
no,
because
it's going
he
down
has-
because it had a huge run.
yeah, exactly. I like that better.
No, and people, they seem to be coming out of the ones that made all the money during the stay-at-home phase, and they seem to be shifting
Right,
over to the other
right.
stuff. I mean, that's what's pretty obvious to me. But I mean, is this a great company? Of course, it's a great company. And are they going to make
Absolutely.
money for as far as the eye can see with the cloud and everything else? Of course.
Yeah,
But
yeah.
I guess the question would be is where would be a place to get back on the bicycle here? What do you think?
245 was a good place and seemed to get down there and then bounce. But
Yeah, it's the former highs of back in December. Excuse me, February.
let me see if I can just put something
So
up here.
it did correspond to the high point in February. And then, of course, once it broke above that in April.
Yeah, I'm just taking a look at this latest advance off of the March lows at
Mhm.
224. And a basic pullback would bring it down to 0.382 of that run up. And that has already been met. And that's pretty much right where it closed today. It's at 248.
Yeah.
Then we got 243, 239, 235, 236. And I think I would not want it to get down there. I think if it got far enough below 243.67 or 243, it's not going to present a fairly decent bullish picture. And we probably have to run Fibonacci's from a much lower level because it's then involved in a deeper correction. But being that it's in the Dow, it's in the S&P, and it's in the NASDAQ,
Right.
I think that it's going to run up again. I don't like the gap, but I say, well, now's a good time to go try and fill that gap, guys.
Yeah, the 240 to 245 area is one area, I guess. And then I got a moving average coming in around 227, where there's some other highs from months ago. So if this,
Yeah,
I
but
guess
see-
it really, if this is a pullback, all this stuff is probably a bargain here today sometime. If
It
it's
is.
more than,
I-
if it's more than a pullback, then obviously you're going to get it at a lower price. Yeah.
Well, it depends on, and again, we're looking at timing. If those broader indexes, the Dow, the S&P,
Right.
the Russell, and the NASDAQ are all pointing that they still have a run higher to do,
Right.
then Microsoft, of course, is going along for the ride.
Right.
Will it get itself to new highs? Yet to be seen. But I would expect it to hold levels current, move up, and then you get to refigure what's going on. But right-
Just off the cuff here, Michael, we had a big drop here today on turnaround Tuesday. The
Yeah,
markets turned around pretty good on Tuesday at the end of the day. And
They did.
now tomorrow is going to be Wednesday, Thursday, and Friday comes the jobs report. There's probably some people who don't want to be short going into a jobs report that could
I
show
am with you.
1.5 million people coming back to work.
I am with you.
So,
I am with you.
yeah.
And of course they come out and they report, the GDP growth for the first quarter and all this other stuff. And it's like, yeah, well, everybody got $1.9 trillion, or not that much, but the stimulus checks. And a family of four got close to $6,000.
And the
So
trade
personal
deficit
income-
number was not good for the economy. I mean, as far as wasn't good for the nation when you're exporting that much of your dollars to other countries,
Right.
Record trade deficit.
Yes. But I think that all needs to get crunched and worked out because of what we're coming out of.
Mhm.
We're coming out of a year of very nasty things.
And
Now-
we have the biggest growth in the world. China's doing
Yes.
okay for growth, but Europe stinks. They're in a double dip recession. And then
Yeah.
you've got emerging markets who are just dependent upon what everybody else does.
Right. I mean, there's so much going on. And because the whole bigger picture includes so many things that the stock markets or the equity markets are not at the top of that pecking order. You know, we continue to keep interest rates at the top of the pecking order, and then the dollar, and then it starts to break down into, you know, eventually getting into equities. But I think that Microsoft is a strong company. It's a good company. They have weathered the storm, I think, very well. And I personally, this is my near-term view. If it drops below 240, don't. If you own it, get some.
Yeah, look
puts,
for
get some-
225 or 230. Yeah.
Yes,
Yeah.
absolutely. Because
all right, let me
I mean-
get to this. Let's get to this next one, Micah, real quick, because I think it's pretty exciting. It's right on the ledge here, it looks to me, and that's Disney, DIS.
oh my, okay.
Because the RSI is right around 50. The market
Okay.
is around 185. It's clearly got a resistance at 190. It clearly has support at 180. So if this thing busts through 180 and the RSI goes way into the 40s, that's going to be negative. And if this thing breaks above 190 and the RSI starts popping off 50,
Right. Now
and
we
there, you know, could be interesting, right?
talked about this stock at one other point, and we were looking for how high this rally could go, I think, or how far it could drop,
Yeah.
because I ran a Fibonacci here. And now we can see that it has reached a 1.618 level.
So it's
And
crunch time.
it's crunch time.
Yeah.
Yeah.
And you would think there's two rules of thought here, that the movies are going to come out, they're going to make a lot of money, and the parks are going to open, and they're going to make a lot of money, and the thing's going to take off to the north side. I would think that is the most reasonable explanation of the future, but reasonable and what happens are two different things. So maybe if everyone really already knows this and they can't get the thing to get bid up,
Right.
maybe there's something down the road we're not aware of. And if it blows out at 180, believe me, we'll find out about it, you know?
Yeah. But also think about this. I think you hit the nail on the head. How much of that already got baked in?
That's it. I mean, the darn thing gone from 110 up to 200 in a very short time.
Right. Right.
Yeah.
So there has to be pullback. There has to be a reconciliation of, like you discuss so often, valuations.
Mm-hmm.
So yes. And again, it doesn't really mean that Disney is a bad company.
No, it's a great
Folks,
company.
They
Yeah.
just survived very admirably, having their money cow, you know, the cash cows closed.
But they did replace it with that streaming Disney Plus. So that
They
was
sure
good.
did.
Yeah.
So innovation, when the chips are down, you get going. So yeah, I'm going to leave room. It's, to me, when it's above like 140% above, 162% above, that to me is frothy.
Yeah.
So I would not be worried even if this thing came down to the 50-day moving average on a weekly basis. So, you know, 50-day. If it starts dropping down to that 200, I'm going to be like, okay, what's going on? But I wouldn't anticipate. But I think that it's kind of completed, like many of the indexes, it's completed its advance, and now it's got to pull back before it starts the next. It's just the natural ebb and flow in the market.
Well, here we're next one. We got the big retailer Walmart, and it does look like it's trying to take off here.
Yeah.
And you know, yesterday we had all these stores like Nordstrom's and Macy's and Dillard's going nuts on the upside. Today, not so much.
Well,
But,
yeah, they get caught up in their own hype,
Yeah.
and the market catches them in their own hype.
Yeah. But these guys here, you know, obviously they're modernizing with delivery, and they're modernizing with a lot of, they're talking about getting into fintech and stuff like that, I guess, or something. I don't know.
Okay.
So
It depends on what kind of I know that they've done a lot of modernization in terms of, you know, same day delivery and getting stuff out quicker, et cetera, et cetera. But their competition for that has already mastered that art.
right.
And so, yes, I think it can go up, but I actually think maybe it'll pull back. If you can get a pullback down to 136, 135, buy it. Because then I think, yes, then I'm going to agree with you. I think this thing does just keep going. But right now, it's overbought. It looks like it does need to pull back. I think
It did have a healthy pullback, though. It went from 155 all the way down to 125. So he gave you $20, $30 off. And
Yes.
I'm seeing a lot of the moving averages turning up off that 135 number. So you thought it might pull back towards there and then go?
Yes, because the 50 is still flat. The
Yeah.
others are pointing higher. So you're right. They're starting, but not giving you that hook. If they gave me the hook, I'd be like, no, you ain't pulling back. Just buy it. But they're not hooking yet. And so, because I still think there's some room in the other markets pulling back, these might go as well. They might just decide to come in here a little bit. But I am going to stand in agreement with you that Walmart does not look that bad.
This next one they got on the list is pretty much the sister of Pfizer.
Pfizer.
So why don't we skip over that and go to AbbVie, because Merck and Pfizer pretty much are looking like they want to go higher.
Now, AbbVie, they do more in cancer research. Is that correct?
I know they pay a hell of a dividend.
Well, there you go.
Yeah.
You know,
if nothing else, they pay you to watch the movie.
Right. I think they do, or they do what they might call specialty pharmaceuticals. I think they're very targeted at specific illnesses and areas, and I think that is the future of pharmaceuticals and medicine. That they finally have gotten it down. I mean, look how quickly they came up with that vaccine.
It looks like it also looks like this thing was in a consolidation of 100 and 110, and it's breaking out to the upside. Is that what you're seeing?
Yes, I do.
Right.
Yes, I do. And again, the weekly chart, not totally overbought. So there might still be some upside.
Yeah, because
So
you went through a consolidation, so that worked off a lot of overbought, right?
It did, but not enough.
Okay.
Again, I'm on a weekly chart, so then we got to deal with that. So
Right.
This is all in that period. It started to come down. It didn't really go off all that much. It wasn't totally oversold, but enough. And now it's pushed it back up. Now, if it got up to this range, then you still could like the company, but let the stock pull back, instead of buying it and then watching it pull back and wonder, oh my God, what did I do? So, but I think, yes, again, I'm not looking at the inside of the companies to what they have in the pipeline, what they have in trials, and what market that's going to push itself into. In other words, is it cancer treatments? Is it diabetes? Is it many of the illnesses that affect such a large part of our population? If they're getting things that control and things that fix and cure, then yes, I would think that this company can go above 125 with ease.
This next one is a therapeutic, I guess, as well, biotech. Aldera, ALDX.
Yeah.
And it's had a pretty wild ride. So I'm sure the person who submitted it would like to know if that wild ride is going to continue.
First of all, I'm going to say, as a chartist, look at these wicks. That's a topping tail. Then it's got bottoming tail. So it's got a little bit of both. Let me take this down to the daily. We'll take a little bit of a easier look. Well, that's why they're look at what happened. Gapped higher on something.
These guys are out of Lexington, Massachusetts. There's a lot of biotech in Massachusetts, and some of it works out pretty darn well. You got pretty sharp people up there with all those colleges, right?
Yes. It's just pulling back. And I think you have to allow, I think it's like if it comes down and it held the 50-day moving average today. If it continues to do that, you can buy it, but you've got to be able to sit tight. And if indeed it's going to come down to the 200-day moving average, but they've got something going on because this thing gapped. And it gapped well after earnings, unless earnings, well, those are first quarter. Or their full year. So I don't know when they report or if they have, but that's a nice gap. I mean,
Yeah,
it
and
gapped-
and there was a gap that just got filled when it gapped from 11.
yeah, today, right.
Yeah,
That's
it
the
went
one
all
I'm
the way up to.
talking about.
Oh, did it go to 16 today?
No, where it, but
Oh,
the
you're talking
gap-
about it filled the gap today. It filled the gap
Yeah,
today. Yeah.
yeah.
So that's all done. And so today's low is probably not a terrible line in the sand.
And it was right at the 50-day
Well,
moving
actually,
average.
there, yeah, I can even put the gap all the way down 11.19, I guess.
But yeah, it could.
Yeah.
But you got the double bonus today. Not only did it fill most of that gap, but it got support from the 50-day moving average.
And your RSI on the 6 month is right around 51. So again, that's the general crunch time area.
Yeah, could
And
be.
so, like I say, when the thing was up at 16, the RSI on a shorter, on the relatively shorter term one probably jumped up pretty darn high.
Yeah,
Yeah, we'll on it
I
to 60.
actually,
Yeah.
I wonder if they have options. If they have options, I'd be jumping in there. Easier to play, and just to kind of to do something. I may look at that one tomorrow. If they've got something in the pipeline, if they got something going on, that's going to be a big positive for their sector.
Yeah.
But
when you see a chart, when you see a chart that looks like the Space Needle, you always have to be worried that it'll be a lot of time going by as it kind of works off that parabolic move. Not in a case like gold, when it ran up to almost 2100 very quickly. Now we're a year or so later, and we're still meandering in these 1800 land.
Right.
So, when you get a parabolic move like that, sometimes you got to go pack a lunch, because it's going to be a while as they work off the excess,
Well, the trick is going to be, I'm going to say, based on what I have, the information that I have, I don't know how long this company's been in existence, but I'm going to say it's all-time high, at least on my maximum monthly chart, is $16.70.
Yeah, no, it is. And if I even put up a 20-year deal here, let's see how far it goes back. It goes back to 2014.
Yeah, so it's not even that old.
No.
Yeah. I mean, and it's not an expensive stock. So, if you, I might play it with options, and that's, at least you're there, you can participate, and you can always if you're buying calls, you can always exercise.
Let's hit Amazon real quick before we have to shut down. Amazon got whacked here today pretty good, down $75.
Yes.
And what are you thinking there?
This is what I said about Amazon when it reported. Amazon reported $89 billion profit, net profit, for one quarter. I don't care what they do to the stock. It was frothy. They ran it above 3,600, got up to $3,667, $68. It was frothy. And then again, they tried it on once again to get it up there, and it died. And I think that what happens is the reality sets back in, and if we get the economy open, are they going to make as much money? And I'm like, yes, because they're so good at it. And here's the other thing. I always keep an eye on with Amazon, on the Amazon Web Services, AWS. They're mastering on many, many things in the cloud, just as Microsoft is, just as IBM is, but they're not being real vocal about it. They're just doing it. And then suddenly you see these earnings and you're like, where'd they make all that money? And then you break it down, and that's usually where. I think that the stock was very due for a pullback. I think a lot of that frothiness that we saw was because there was a rumor, I don't know if it's still alive, that Amazon would do a split. That still could be out there. If they do a split, this thing's going to the moon first. I like that. Now, this is on the hourly. You can see that my little short termers, the 8 and the 4, that 8's starting to hook. So But
I'm just going to say one last thing on Amazon. The high that we hit is the same high that it hit on September 2 of last. So in September of last year's high and this year's high is the same. And it really came off this year's high pretty hard. Let's be frank.
it
So
did. Oh, it did.
some people think tech had its day and the day ended in September of last year. And if that, with this thing hitting the September high and then rolling over $200-300 fast, whatever it was, 200 and change, it'll be interesting to see if that's a sign that that the high value tech stuff pretty much saw its day last September. And this rally we saw was just a throwback rally. Because right now, if you're looking at the graph, you got double highs there and you've got a
Yeah.
big rollover. And you had the same kind of big rollover back last September off of that point. So there's something
Yeah.
about 35.60 that doesn't sit very well with the Bezos crowd.
I don't know.
With that,
But
with
yeah,
that little sidebar, that's only a little, just an observation. I don't think it's coincidental, though. When you drop $250 or something off a price, it's not
Yeah.
coincidental.
yeah.
Anyway, let's go over what you've got going on up there, and please invite these guys to contact you and get some more details.
Absolutely. First off, please join me tomorrow, and along with a host of additional people for a full day, actually, I believe it's 2 days of discussion and presentations on psychology in the marketplace. And I'll be presenting tomorrow morning at 11 a.m. Eastern. And the title of my presentation is The Battle for Your Mind. What is your SET score? And I invite everybody to come in. They're usually just full of information for people and very helpful for traders. So I would recommend coming and joining us tomorrow for as much as you can. And if you can't, please go and subscribe to the Timing Research YouTube page. Second thing I want to say is that I now make daily video podcasts of the S&P 500 and the NASDAQ, both the futures. And so I invite everybody to come to tradershelpingtraders.com and then subscribe to our YouTube page. And there you will always get notification when a new update is in, which is daily. I am also continuing to work very hard on building up that base and my analysis. So I'm bringing it out in the form of podcast, video podcast. So it's always with the chart. And I'm putting together where I think I'm going to be starting a trade room again. And so what you can do just to keep notifications, go to the website. It's either you can go to tradershelpingtraders.com or logicalsignals.com, and you should be able to go in and then just click so that you always are notified of an update. And then you'll find out when we can get the trade room open.
Sounds good.
And
Make sure everybody takes advantage of that. That's an excellent opportunity. As far as the optionprofessor.com, we have a weekly newsletter, and we direct people to areas we think are good. So 6 or 9 months ago, we told you about the banks, we told you about energy, we told you about value. Now we're talking about what we're doing for the next 6 months, which is very interesting. So go to optionprofessor.com/subscribe and find out how you can find out what we're thinking about, which has been very, very value added for the last year and a half. David, back to you.
All right, thanks guys. Great show. Covered lots of stuff today. So yeah, as Michael mentioned, we are for the next 2 days, we have a big event planned. The latest of it'll be the 29th Synergy Trader event, actually. So as you said, the topic is psychology, discipline, and time management. And yeah, as he said, he will be on at 11 a.m. Eastern tomorrow. And we're starting the day at 10 a.m. Eastern time with Mercedes Van Essen. And then also tomorrow we have David Keller, Fausto Puglisi, Valerie Fox, Jeremy Newsom, and Julie and Adrian Manns scheduled. And then on Thursday, we're getting started at 10 a.m. Eastern time again with Mandy Rafsanjani, Norman Hallett, Sonny Harris, Anka Metcalf, Doc Severson, Maria Villatoro, and Sean Kozak, and also the option professor will be doing have a presentation as well. So yeah, so it'll be 15 total presentations on trading psychology, discipline, and time management. And you can always get access to the live events just by going to TimingResearch.com/live. Also, if you just subscribe to Timing Research on YouTube and your favorite podcast app, you can get the archives as soon as they're posted as well. So I just want to thank my guests again for today, Michael Filighera of TradersHelpingTraders.com and the option professor of OptionProfessor.com. Thanks, everyone.
Thank you, David.